Do you still use illustrations? I don't know what happened. I love illustrations. They bring up questions, they answer questions, but it seems something happened a while ago where people stopped using illustrations in the industry. Like it was a bad thing to show a client an illustration. So what I'm going to go through, also, I'm domiciled in the state of California, been so the whole my entire career, but I don't do a lot of California based stuff. Most of my stuff is like in Arizona because California has special rates and special rules and special features in their that no other state has. So it's like 1 in 50. So I don't talk about it much, but I think I should because they're good features California has. So today what we're going to do is look at a client approved illustration. So we're going to look at the illustration and it's going to be just for the state of California, effective today, November 24th, 2025. Rates are subject to change thereafter, right? So let's take a look at the MYG illustration for the state of California. This is a guarantee walk-away product. So we'll get into all that stuff. So let's just start. Okay. So this is an illustration. The insurance company name is set at the top of the illustration and in the name of the product as well. So you see the product's name is the Select Max. It's from the insurance company called Symetra, and it's called an individual modified single premium contract. And the modified in this, and I had to re-ask the question. I wasn't sure exactly why it was modified. I know there's no MEX in annuities. So when I asked the question, it was because the contract had certain features allowing premiums in the first year. So it's an SPDA, a single premium that allows multiple premiums. So that's how it's modified, right? So that's the first question. You know, if a client might ask, what does modified mean? You want the answer to those questions to seem and to know you know what you're talking about, right? So the next is just basic stuff, the customer's age, client info, the date of the proposal, the state, California. This is only good for the state of California. And next will be the purchase payment. Whoops, I skipped that. It's $100,000. And it tells you what it is. And it tells you underneath 10,000 is the minimum. We're using 100,000 because it's a banded rate. You can add purchase payments of 1,000 or more throughout the first contract year. There's your modification. So that explains that, right? Okay. Next is the withdrawal charges. It just says, hey, this is a 7-year period and the withdrawal charge period and interest rate guarantee is 7 years. They match, right? MYGAs should match. The durations should match. Next is the interest rate. As you can see, it's contractual interest rate guarantee. Walkaways are lower. Why are walkaways lower? Because they are going to be fully liquid and the insurance company doesn't want to have problems and have to pull the contract or pay too much. So they put a really low minimum. And in this one, it's 0.25%. Remember, the strongest guarantee in a contract is the minimum guarantee. Now, that doesn't mean after 7 years in this contract, they're going to just drop it to a quarter. It just means they can. Next is the type of product. You can do these for IRA, Roth, the type of qualifications. And of course, it has a free look of 30 days. Next, we'll talk about access to the account, right? We're still on the first page and we're getting all this information, right? So it has free withdrawals. You can withdraw the accumulated interest earned minus previous interest withdrawal free of surrender charges. Amounts greater to this will be subject to a withdrawal charge. So what does accumulated interest means? It means any withdrawals, any interest earned that you haven't pulled out. So if you wait 5 years, you can take 5 years of interest, right? The charges begin at 8% and decline. This is your surrender charges. Then just consult your financial professional for interest rate, but we'll go into that more. Nursing home and hospitalization and terminal illustration waivers, terminal illness waivers are available. Free withdrawals are allowed under certain conditions, and there'll be extra features to that. It's very difficult to get usually these nursing home and hospitalizations. You have to meet very specific, indicators and features, right? You can withdraw interest as earned. We already went through that, all accumulated interest. Next is just, some disclosures and that these are illustrations. This is not binding. This is just as of today. If you put the money in, this is what it might look like. It's for it's a proposal and hypothetical purposes only. So you can read more about that there. But here we get into the bread and butter, right? You got the first column is your contract year, your age, interest rate, your credited interest, your ending account value, your surrender value, and death benefit. And it's really important in this illustration in the state of California, all this stuff is 100% accurate because there's no market value adjustment, and we'll get into that. So this is what they assume. So in year one, you can see you earned 5.05 on 100,000, you earned 5,050. There's your new accumulation value. There's your surrender value, and your death benefit matches the accumulation value. They don't charge at death. That's very good. And as you can see in this policy, if you put in $100,000, you end up with $141,180 after 7 years, and that's guaranteed. And if you look at the next set of numbers, this assumes the guarantee of only 0.25%, but you can see it matches the surrender and death and surrender and accumulation all match because there's no more surrender charge, right? It's all over. It's fully liquid. So the client can stay for 1 day, 1 month, 1 year, 5 years, whatever. And you know this is the worst case scenario, 0.25 point. The odds of them actually doing a 0.25 point are very thin. Most people would move. You could probably do better. But yeah, as you can see, they all match off from year 7 plus. And I will show you. Okay, so this is really cool. I did another video that said, hey, let's say you got a client adding $100,000 to this policy, right? But in the 7th year, they do reduce it. After the 7th year, they reduce it to a 0.25 point. What are you going to do? Well, you could have when you started this policy with between $250 and $5,000, opened a flexible premium product with a matching duration surrender, actually probably less. You could do a 5-year, so it will be out of surrender. Now, if you don't like the 0.25 point they offered you, you can take your 141 and go dump it into that flex premium. You had the hindsight that you had the foresight, to buy in advance, and you can dump the money over there and never less than the minimum, currently between 2.65 and 3%. So instead of earning 0.25, this client could dump it over there and earn 3 to a quarter, whatever their minimum is over there. So that's very good. And take out my video, Protecting Clients with Recurring Surrender Charges Using Flexible Premium Annuities. It's great for IRAs too, but that is a great product to protect yourself if interest rates are up, hey, and you can get a 5.5 again somewhere else, 1035 it. But if interest rates are super low and the best rate out there is a 2, you got better on that flex premium. You had the foresight to buy in advance. So yeah, that's the good one. And this is just, rounding out the future years of this contract. It's just another page of the illustration, page 3 of 6. Here's another page, and then they just go through more disclosures. It breaks down the terminal illness endorsement. So if you wanted to read the exact qualifications for these, you can get that. Here's a very important thing. Market value adjustment does not apply. I don't know why these are bouncing off so quick. Market value adjustment does not apply in California. So if we go back a couple pages really quick, all these surrender values you were seeing here, that's guaranteed. So if you wanted to exit this product in year 4, you'd get 121,782 because there's no market value adjustment. I'm sorry, you'd get the 116, the surrender value. There's no adjustment to that, rates up or down. So that's what I really like about a non-MVA, and California is really great for non-MVA products. California doesn't like MVA. They don't like certain surrender charges. So you'll see certain things in California will benefit the client in that way. So guarantees are based on the claims paying ability of the carrier. Interest rates are subject to change without notice. So the fact I made this video on November 24th, 2025, November 25th, everything could have changed. So you want to check the rates prior to it. But the policy itself, the MYG itself is going to work the same way. Just you got to adjust the rate. After 7 years, the interest rate can adjust, but will never be below the minimum. The MVA, if there is an MVA, is only during the 7-year surrender charge schedule. Withdrawals may be subject to if you're under 59.5, right, you can take 10% off your yield because there's an excise tax. And this also goes into, shelter in a shelter type thing. It's tax deferred, but an IRA wouldn't get any extra tax deferral. It's the shelter in a shelter. It's still a good idea if you want to make that 41% in 7 years, use it. Contracts that are not owned by a natural person, meaning if these are corporate owned or charity owned, well, that doesn't matter because charities are, tax exempt. But it's saying if there's a corporate owned, you don't get the tax deferral. Each year, the tax interest is taxable to corporations and non-natural owners, unlike a human being the owner. So be careful of that. And neither Symetra or its employees or me or any wholesalers or any agents offer tax advice. Go to your tax person for tax advice. Yeah, and the cool thing Symetra does, and I don't know why those are popping off so quick, but the cool thing Symetra does is they give interest rates all the time. They give part of the illustration shows the interest rate sheet. So 1120 was the rate, and you can see the different bands. If you wanted to jump to the 5-year or the 3-year, you can see the rates there. So that's pretty cool. And it also lays out the surrender charge. And as you can see, California has a lower surrender charge. It's 87654. Then I'm going to pause this real quick. Okay, so what I did, I paused the screen so I could put these pop-ups working better. They weren't working, my little disclosures, but there's the current rate sheet, and this is it. Yeah, I want to show that the rates were banded. They have up to 4 different levels, 4 variations, as you can see, from 100 to 50,000, 50 to 100, and those just happen to be the same, and then 100 to 250 and 250 and above. Okay, so I just wanted to show that. For some reason, it was dropping off my these examples for you. You couldn't read them. So as you can see, this is a perfect example of California having a lower surrender charge by 1% and no MVA. And both of these are walk away. I love walk away. You have full liquidity at the point. You have time to make decisions afterwards and all that good stuff. So as you can see, there's the 7-year surrender charge, all that. More disclosures here, a repeat of earlier disclosures. That's all it is. And this talks about the MVA calculation and the indexed use should you surrender. And again, more repeat of earlier disclosures. So a lot of disclosures and illustrations. You can have some questions answered. I had that question of the modified. Why did it say modified? It's because it's single premium that allowed additional deposits. There's other ones that allow it for 90 days, give you the initial interest rate. This one, it's the new money rate at the time you put the money in during that flex period. So anyway, that's the end of the client illustration. If you want to do a quick calculation, not from the company, but just see what the interest rate, you can go to my website and I have those calculations available. Just go ahead, visit Annuity Experts, and you can do a MYGA calculation right there. That's pretty self-explanatory. I've done other videos on all that good stuff. So MYGA rates by ratings. There's some simple disclosures. Yeah, thanks for watching. I hope you found this insightful, and I hope you find illustrations are let's close that. Illustrations are very good for answering questions and keep you up to date on, anything the client might ask. So X, YouTube, LinkedIn for the most up-to-date information. Thanks for watching, everyone. Take care. Bye-bye.